Welcome all of you hard workers to our income statement or statement of profit or loss, depending on what sort of framework are we looking at it. Is it corporate, not-for-profit, government? What is it? Well, in this case, pretty much going to be income statement questions, most prevalent on the exam here. And in this case, we're going to ask ourselves, which of the following items would not be included in other comprehensive income? And if you are familiar from our lecture, take a look here. We've got a nice chart for you. The statement of comprehensive income is made up of net income and OCI, other comprehensive income. Obviously, net income, income statement, this is just normal, right? This is normal. You're probably quite familiar with this before the exam. And before studying, you might not have been as familiar with what you see here, the OCI or other comprehensive income. As we mentioned, these are generally items that don't really reflect how the company is doing operationally. For example, pension adjustments, if your pension plan is doing really well, good for you, but that you shouldn't reflect that in your net income because it doesn't accurately represent how your sales are doing or your expenses. Same with a lot of these other items. Now, these questions are going to be as simple as memorize the chart, memorize what's included and not, and answer them. And the reason we give you one of these is because many on the exam will just be as simple as this. It's, okay, what is not included, what is included, and the possible answers will be kind of close. For example, which is not included in OCI? Well, okay, pension, prior service costs, or other credits. It says pension adjustments, so you got to get familiar with how they're going to display the name. They're not just necessarily going to say pension adjustments. In this case, these are pension adjustments, so we are going to cross out letter A. That is not going to be an answer because it is included. Next up, foreign currency translation gain or losses. Well, if we look here, foreign currency items, that will be included in our OCI, so it's not an answer here. The unrealized holding gain or loss on investments classified as trading securities. Now you see here, even if you weren't really sure, you can kind of take a look at this question and say, all right, both of these are similar. I know there's only one unrealized on one sort of security, and one of these is going to have to be our answer. Now in this case, available for sale debt securities will be our inclusion, and trading securities will not be included. And if you want to hear more about those, what those are, we'll be seeing those in our financial instruments chapter. And just like all these other items, right? We're going to be seeing these later on, although not necessarily pension adjustments, as that got cut from the exam. But foreign currency items, there's a chapter for that. Cash flow hedges, chapter for that. All of this we'll see later on. Okay, next up, in the financial statement process, net income from the income statement flows to which account? Now, net income, think about it. You make the money, wonderful. Where does it go after that? It probably goes into a bank account, right? Like, that just makes sense. It's going to go into some sort of bank account. However, what specifically, what account? Well, that account, let's see. First off, retained income, that's not a thing. That's not a word, not at all, does not exist. We've also got cash on hand. That's not going to be where it goes either. It's just not included in your cash account. Accumulated earnings. This is, again, not really a term that we're going to see at all. Accumulated earnings, that probably more of a tax term. Lastly, retained earnings. Now, this process here, net income flows to retained earnings. And so that is an increase to retained earnings. Now, what is a decrease to retained earnings? If you're not familiar, I'll tell you. That would be such as like a dividend. This is going to be the most common decrease to retained earnings. Or if you want to use that money for a project, capital project, sure, you could use it there. However, our most common examples of an increase or decrease to retained earnings, our equity account, is going to be net income flows to retained earnings. It's put in the retained earnings account at the end of the year. And then whenever we pay dividends, it's a reduction to retained earnings. Final answer is going to be letter A, retained earnings. Great questions there. Hope you all enjoyed, and I'll see you in the next one.